What if you could fund your next real estate deal without asking a bank for permission? What if you had access to $50,000, $100,000, even $250,000 in business credit at 0% interest? And you could use it to fund deals, use it for marketing, use it for operating capital. Ask, what if you could do it without jumping through the traditional lending hoops that stop so many real estate investors in their tracks? Well, today you're going to learn exactly how that works. Welcome to another episode of Raising Private Money. I'm Jay Conner, also known as the Private Money Authority. And this is the podcast where we talk about how to get the money for your real estate deals without relying on banks. And today I'm joined by a dear friend, someone who has helped entrepreneurs and investors access over $2 billion in business credit. My guest and friend is Ari Page. He's the founder and CEO of Fund&Grow. And since 2007, Ari has built one of the most trusted business credit companies in the country, helping tens of thousands of entrepreneurs secure $50,000 to $250,000 in 0% interest business credit, capital that they can use to grow their businesses and fund opportunities. Ari's company has landed on the Inc. 5000 list every single year since 2016, has 4,000 plus client reviews averaging 4.9 stars, and he holds an A+ rating with the Better Business Bureau. Today on the show here, Ari's going to break down how real estate investors can strategically tap into business credit to fund deals and grow faster. So if you ever wondered how to access serious capital without going to traditional lenders, you're going to love this conversation. I'm going to introduce you to Ari Page, and you're going to meet him right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Ari, welcome to the show.
Awesome. Thanks so much for having me.
You're absolutely welcome, Ari. So good to see you. You've helped entrepreneurs access over $2 billion in business credit. So let's just go to your origin story. Let's start here. How did you first discover this world of business credit and realize it could become such a powerful funding strategy for entrepreneurs and real estate investors?
Well, it really was because I was struggling in 2005 in finding traditional financing to move my real estate operations forward. And it was, I was tapped out on all the traditional loans. So I met this mortgage broker and I became friends with him. And I started working together with him, helping do broker mortgage loans with him. And that was right in the 2005, 2006 time frame. And so we started doing that all the way up till 2007. And then as the markets began to crash, our entire mortgage company at that point, we kind of retooled and we started to use business credit cards to help clients where the loan to value amounts were dropping on the different loans that we were helping them get. And back then we were getting up to 500,000 pretty easily. And they were able to use it in conjunction with different types of loans in terms of using it for down payments, because the loan to value amounts were dropping. They were dropping fast. And then of course there was the big market crash of 2008. And at that point we fully transitioned over to helping clients get access to business credit as the most viable, the easiest option to help them fund their business.
Yeah. Your story is very, very similar to mine. It was out of necessity back in 2009 when I was cut off from the banks that I had to find a better and quicker way. And that's why I started using private money. What I love about your service that you provide to real estate investors and entrepreneurs is that it's a beautiful complement to the private money strategy that I use as well. And, there's a big misconception. Most real estate investors, they think their only options are hard money lenders, banks, mortgage companies. So let me ask you, Ari, in your opinion, what's the biggest misconception people have about business credit and accessing capital?
Well, that is that the use of a business credit card won't be helpful in my real estate business. Like, how can a business credit card meaningfully replace a hard money loan, for example? How could I use it for a rehab? Or how could I use it to fund an escrow account? So a lot of times people don't realize, first off, how easy it is to get approved for business credit cards. And they might be a solo entrepreneur or a real estate investor. They don't realize you're a business. You are a business. You can get access to business credit. And then how do I use those business credit cards like a line of credit? And I'm not talking about doing illegal cash advances or liquidating credit cards. That's completely against the card issuer rules. I'm talking about using trusted third-party payment services that allow you, that they're approved to directly wire money from your credit card into an escrow account, or to pay a vendor or a contractor that doesn't accept credit cards. So once they learn that using a business credit card is a smart strategy for leveraging, and because when we think of credit cards, we generally tend to think of bad debt. But real estate investors, they're doing their proper due diligence, or at least you should be, and they're vetting out their deals. They know that if they can get access to a 0% introductory credit card that might be introductory 0% for 6 months or up to 18 months, think of how many deals you can do in that period of time without having to pay points and closings on a loan, paying high interest during that period of time. And then through the card stacking process, being able to rinse and repeat, do it over and over. And so the biggest misconception is that you can't use a business credit card for a real estate investing business.
So you mentioned using these third-party companies where you'll actually give your business credit card to them, and they can convert that transaction to where if you have an invoice to pay to a general contractor or a draw or whatever, these third-party companies can take your business credit card and actually generate a check and put that in the mail for you, right?
Exactly. And the only caveat is you can't pay yourself. You can't pay your own entity. You can't pay your wife's entity, but you can pay any business that is giving you an invoice for services that need to be rendered. Or, for example, you could fund an escrow account. But of course, you have to keep in mind that you always need to disclose to a mortgage company or to a hard money company where you're receiving your down payment money from.
Sure. Now, you talk a lot about 0% interest rates, business credit. And, you talk about getting 50,000 to 250,000, for real estate investors or entrepreneurs at 0% interest business. It almost sounds too good to be true. How does that actually work?
Yeah. So this is a pretty common question. Like, how can they offer 0% cards, and why does it even make sense? But guys, think about this. The bank is not only making money off of the interest rate on a credit card. If you are getting access to a 0% introductory card, that means you are a prime borrower. Prime borrower means likely you have above a 700 credit score. The default rate on prime borrowers is extremely low. So they know that they're going to get paid back, number one. So it's not just about the interest rate. It is about every time you swipe your card. Every time they give a business owner a credit card, you're going to then use that card and you're going to purchase things with it. And every time you purchase, the merchant that you're purchasing from has to pay a interchange fee or a merchant processing fee. So if you're at Home Depot and you're buying materials and you swipe your card at the counter, they're going to pay a 3-4% fee. That fee that the bank earns it makes it worth it for them to get these cards in your hand. Do you guys understand? The bank doesn't just make money off the interest rate. They're making money hand over fist from you simply swiping your card. The more businesses out there with credit cards, in fact, the more people out there with credit cards, the more that you're swiping, you're using the cards, and they make money on merchant fees. They make so much money on merchant fees, they'll actually split the fee with you and give you cash back and rewards and airline miles. I have over 1 million American airline miles. I could fly anywhere for free on those American airline miles. And I have some cards that give me up to 5% cash back, some at 3% cash back. Imagine doing a project and just bringing the price of the project down by 3% or 5%, depending on the card and the amount of cash back they give you. It really does sound too good to be true, but all you got to do is go and Google 0% business credit cards, and you'll see all the major banks offer. It's not a loophole. These cards have been out for over 2-3 decades. This is something that the banks have been offering for a long time.
Amazing. Okay, let's connect the dots from my audience. I want us to drill down even more. We touched on it, but how can a real estate investor specifically use business credit to fund deals, marketing, operations? And, you know, you've helped countless entrepreneurs and real estate investors. What are the most popular ways that you're hearing your clients that you get them this business credit for them, that they're using this strategy or using these credit cards?
So we've helped over 35,000 clients actually go through this process and receive over almost 2.1 billion in total funding. So we're about to push that 2.1 billion number. And so some of the most popular things that businesses will use this for is for replacing a hard money loan on a rehab. That is something that is, for real estate investors, extremely common. Why get a hard money loan for the rehab when you can replace that with 0% business credit cards, and you can use the payment services in the rare instance that you need to pay a vendor or a contractor that doesn't accept credit card. Now, as we know, most of them do accept credit cards. So you can replace a hard money loan. Now, many hard money loans or even private money will allow you to use an unsecured business credit card, the funds from it, as a down payment. So through the payment processors, like, for example, plastic.com, and that's the word plastic with a Q at the end. So what they do is they actually allow you to fund an escrow account. Now, you always need to disclose to the lender where you're receiving your down payment money from. So you need to make sure that the hard money lender that you're working with allows you to use that. So some of our clients will use down payments from their business credit cards. They fund their deal, they purchase, they rehab using business credit cards. Then once they've rehabbed and they have rented out the property, they then refinance the property using a DSCR loan, for example. Then once they've pulled 75% out through DSCR, they then pay back all of the credit cards and, of course, any original hard money loan that they may have taken out at that time. So there's a variety of different ways of using it, but those are the two most popular.
Excellent. Now let's talk about who qualifies. Do your clients that you get them these business lines or the business credit cards, do they need a long established business, high income, perfect credit? What's the ideal client looking like there?
So an ideal client has a really good personal credit score. We only work with clients that have a 700 credit score or better. Now, why are we even talking about personal credit if we're talking about business credit? And the reason is because a business credit card is personally guaranteed. They are going to first look at your personal credit and determine your credit worthiness. Now, a business credit card will not report on your personal credit report if you keep it in good standing and have no late payments and don't default. You keep your card in good standing, the business credit card will not report on your personal report. They're going to look at your personal report in that initial application process, and an inquiry is incurred at that time. So, but then once they've granted you the credit, now it reports to Equifax Business, to Experian Business, as well as to the Paydex, to Dun & Bradstreet credit profile, which builds you a Paydex score. And so that's really what you want to do, is you want to start building your business credit profile. That way you can get access to more and more funding. So having at least a 700 credit score. Now you need to have an entity. Now, by the way, this is also something we'll help clients with, because business credit cards are one of the most preferred lending vehicles for the banks for startup businesses. If you're a startup business, you will qualify for business credit cards. And this is a really beautiful aspect of business credit cards that a lot of other business loans that you can't qualify for if you're a startup. So whether you're doing 10, 20 million a year, whether you're a startup, you're going to be able to qualify for business credit. And one of the major things to that, one of the major hurdles, is just having good personal credit. If you have good personal credit, and guys, you want to make sure that you're using your business credit. You don't want to use personal credit cards in your business. That really harms your personal credit. Your credit scores go up and down along with the balances of your credit cards. And the same credit stacking process of using business cards doesn't work if you're trying it with personal cards. So the qualifications are to have an entity or a business and to have good personal credit. Now, if you don't already have an entity set up, this is another thing that Fund&Grow will actually help you with. So we don't pay for the state filing fees, but we will provide you the articles of incorporation, make sure that it's set up correctly, make sure that your NAICS codes match your industry, so that when we take you to the bank, you're going to actually qualify, and not just qualify, but for high limits. So those are the basic qualifications of what you need for business credit cards.
Perfect. Now, if someone's listening right now here to the show and they want to access capital quickly, realistically, really, how fast can someone get access to this kind of funding?
So the way that Fund&Grow operates, and if you were to try this on your own, this is what you would need to do, is we apply in what we call rounds of funding. So we do 3 rounds of funding over a 12-month period of time, providing a lot of consulting to the small business in between each round of funding. So for example, how to use the card like a line of credit, what are the best utilization patterns, a whole variety of other things. And the best way of getting access to this is to first look over your personal credit, make sure there's no disqualifiers that would stop you from being able to get it. For example, you can't have bad credit. You can't have any negative items on your credit report. And we don't help with credit repair. That's not anything that we do. But what we would do is then we would look at over the client's profile, determine their eligibility. Then based off of our past history of working with 35,000 clients, we would determine what is the best 5 banks to take you to first. So then we would perform what we call your first round of funding. Now, on that first round of funding, you could get anywhere from 50,000 to 70,000. And that is if you have above a 700 score. For clients that are well qualified, in other words, you have way higher than a 700, they're receiving up to 100,000 on that first round. And then 4 months later, 3 to 4 to 5 months later, we can then go for your second round of funding and build an additional 50, 70, up to 100,000, depending on what you qualify for. And then, of course, we would do the third round of funding. So not all of the funding comes in on the first round, but our clients are receiving that first round of funding. They're starting that first round of funding within 14 to 21 days after starting our program. And of course, there is actually clients that get into funding even sooner than that, as little as a couple days after getting into the program, as long as there's nothing that needs to be changed on their profile. But if there is work that we need to do, then they're typically the average that it takes when we look at our data, it's about 14 to 21 days for clients to get into that first round. Then they're doing their second round in about the middle of the program. So that could be like 5 months later. Then they're doing the final round on like month 10 or month 11 into the program. So 3 rounds of funding can generate up to 250 to 300,000 of funding for well-qualified clients. You have to have a 700 score or higher in order to be able to build up to the more substantial amounts.
So you mentioned this briefly a moment ago, Ari. People have a choice. I mean, they can attempt to go out on their own and apply for business credit cards, or they can be a client of yours. So I know you've got the data on this. What are the biggest mistakes people make when trying to build or use business credit on their own and not have, a professional team like you have to do it for them to make sure they can get the most in their lines of credit?
So one of the big mistakes that we're seeing now is that people come to us after trying to use AI to get them business credit. And it just flabbergasted me that people would actually go and put their personal information into AI. And guys, as a fair warning, do not go and put your personal information, your EIN number for your business and your address and all of that into an open AI, into ChatGPT. You're sharing all that sensitive data with that company. And so what we've seen is people have tried to use AI to get access to funding, and it's created a whole quagmire on their report, all kinds of inquiries that resulted in things that they weren't even looking for, to funding that they weren't even looking for. And so our process is extremely selective. It's based off of working with 35,000 clients over the past 19 years. We're fully FTC compliant in every way. And what the way that we operate is much different. So we are a consulting service. Now we actually do the applications for you, but the most important part, our data shows, our 2025 data shows that 72.4% of all of our funding approvals come after the application process. And what I mean by that is sometimes 27.6% of the time, you'll get approved right on the application, right when we apply. But 72.4% of the time, the funding comes in after the application process from us walking the client through our powerful negotiation process. And what that involves is the client verifying themselves with the bank, asking for higher limits with the underwriter, merging old interest-bearing credit cards into the new 0% applications that we applied for. You'd be surprised how amazing that migration process is, how much funding you can get by converting your old credit cards from the same institution into a 0% card with an application from that same institution, as well as the client directly negotiating lightly with the underwriter. And we walk you through all of that in a fully compliant way, so you know exactly what number to call, exactly who to talk to, exactly what to say in order to get these approvals. You'd be surprised how often the business card applications just get stalled in the bank process, where they're waiting for the client to verify themselves. And then when they are verifying themselves, they can go over all these negotiation points. And that is where our data shows that 72.4% of our funding comes from. And by the way, Jay, I couldn't throw that number out without being shut down by the FTC if I couldn't fully back that up through data. Our data over the past 19 years of showing clients coming into the program, of the applications, walking through this negotiating verification process, proves from every single touch point, every single email, every single phone call, every single coaching call, every single application, every single negotiation and approval is tracked meticulously. We are able to prove this data without a shadow of a doubt. This is hard facts of what we provide for our clients. And it's another way of saying it, Jay, is that 72.4% of the time, the small business could not do this on their own.
Yeah. Another way I was hearing it was, if someone tries to do this on their own, if they can even get approved at all, they're going to miss out on 74% of the potential funding that they could get if they were working with you and your team.
Yeah, exactly.
That's amazing. That's amazing. Well, here we are in 2026, Ari. What's going on different this year? What are some of those big topics that are in the forefront of your mind for this year in 2026 as relates to the business funding service that you provide?
Yeah, so that's a great question, because boy, have things changed since 2020. And we get asked this all the time. What has changed? Are business credit cards still something that I can get approved for? Is this something that still works in 2026? And the answer is that it does work, but it's much harder. The 0% offers still exist. They're not as long as they were in 2020. In 2020, there was quite a few 2-year offers. In today's market, it's much more common to get a 12-month at 0% offer. It takes a lot more legwork to get approved for the applications. The banks are a lot more selective in who they approve. And quite frankly, our job is a lot harder than what it was in 2020. And it could just be due to the overall economy. It could be due to credit standards tightening. It could be due to the fact that there was so much free money in, during COVID, and how the inflation was just going insane. The banks were just pumping out money. The Fed, had lowered their rates. Then they raised rates. And so there's a variety of different things. It was the perfect storm at that time. We were getting so much funding at that time. It was so quick. It was so easy. It was flowing in. But last year, we still generated $175 million in total funding. And the actual number, I think it was like 174 point something, but right around that number in total funding last year. And all of that, every single one of those cards was a 0% introductory card for either 6 months at 0%, 12 months at 0%, 18 months at 0%. And the banks are still approving it. It's just a little bit more legwork. It's a little bit harder. We wish that things were kind of like it was in 2020, except minus the inflation. But here we are in 2026, helping people and funding not only deals, but dreams.
That's amazing, Ari. Well, I don't know anybody else that has got any more expertise and knowledge on how to get this kind of business funding in place. So for those of our audience that are wanting to get in contact with you and let's get rolling, what's the best way for them to do that?
So the best way to do that is for you to go through our pre-qualification tool. Now, and you can see that right there on your screen. It's fundandgrow.com/JConnorPQ. That PQ stands for pre-qualify. Now, what this is going to do is this is going to register you for a free business credit consultation and put you through the pre-qualification process so that our business consultants know exactly where you stand when they're giving you your free business credit consultation. Now, there is no credit inquiry incurred from this pre-qualification process. But should you move forward and work with us, when we apply for you, there will be inquiries on your credit report. That's just the nature of applying for business credit cards. However, the pre-qualification process does not put an inquiry on your credit report. That is a soft pull. There's no obligation. You can go to that link that's on your screen and you can fill out the form. And what that will do is that'll immediately allow you to know how much funding you may qualify for, as well as register you for a free business credit consultation. My team will reach out to you and they will talk to you. Now, even if we can't help you, we're going to point you in the right direction. If there's something going on your profile and you need to get that fixed, then we'll point you to another company that can help you get that fixed. There's always a path forward, even if you're not able to get funded right away.
So let's let everybody know that URL. I'm going to spell it out for those of you that are listening on the podcast. Of course, this URL is in the show notes. So to get started, you got your free business consultation and an initial pre-qualification. Go to www.fundandgrow.com, FUNDANDGROW.com, fundandgrow.com/JConnor. And remember, I'm an ER, not an OR, /JConnor, JayConnorPQ for pre-qualification. fundandgrow.com/ConnorPQ. Ari, amazing. Thank you so much for joining me here on Raising Private Money and for sharing such valuable information. And I'm so excited for all of our listeners here in the audience to go to that URL and to get that initial consultation scheduled. Thank you, Ari.
Absolutely. Thank you so much for having me on, Jay.
You got it. All right, everybody, that's a wrap for this episode of Raising Private Money. I hope you found my conversation with Ari Page as eye-opening as I did. I always learn from Ari. Just imagine what could happen in your real estate business if you have multiple streams of funding available to you, private money, business credit, and other creative sources of capital, all working together to help you do more deals. Now, here's something I want to ask you. If you got value, and I know you did, from this episode, would you do me a favor? Help me get this show in front of more real estate investors who need to hear it. The best way you can do this is to subscribe to the podcast, leave a review, and share this episode with at least one other real estate investor that you know. Just take a moment, grab the link to this episode, and text it to a friend. Post it in your Facebook group, or share it with someone in your network who's looking for better ways and more ways to fund their deals. Because here's the truth. The more investors we help learn how to raise money the right way, the more deals get done and the more lives get changed. And hey, if you haven't downloaded my free guide, jconner.com/money guide on how to raise private money for your deals without ever asking for money, be sure to check out that as well. Thank you for tuning in to Raising Private Money. I'm Jay Conner, the Private Money Authority, and I'll see you right here on the next episode.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/money guide. That's jconner.com/money guide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/money guide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.